Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Monday, the 17th of March, 2008, and the market's closed. The S&P 500 finished with a loss of just over 1%, but it certainly felt like it should have been a lot worse earlier with some of that news that we've seen, particularly out of Bear Stearns and the smashing that their stock took today. If you look at that, it's just really an amazing unwinding of a big mess here, and maybe it's signaling that we're getting a lot of this bad news to come out, and that's good for the bottoming process. But I don't think you're going to look back in 6 months and say today was the day of the lows. So there's still really no reason to be a buyer in this market. We've got lower highs and lower lows. This market came down and pretty much tested these lows. Today's low, I think, was 126.07, and the low over here was 126 even. You look at the weekly time frame, though, we're still in a big downtrend, and no signs of bullishness continue to be evident on pretty much any time frame you look at. When we look at this 30-minute time frame, I think this is going to be an important trend line here over the next week or two. And we saw that the lows from last week were undercut on the open. The market rallied quickly, came back down, tested those lows for the day, and then we did see some strength in towards the end of the day here. And let's see, we've got here on a 5-minute time frame, the average price over the last 5 days is right around 130. So even after last week's Federal Reserve actions, and then obviously this weekend we saw an emergency 25 basis point cut in rates, and the Fed is doing all that they can do, it seems, and I'll leave my opinions of whether I think it's good or bad, but the market is showing some resiliency here when most people were expecting for a real severe meltdown type day today. If you look at the 1-minute time frame, you see the buyers took advantage of that early gap down. Real nice pattern of higher highs and higher lows. The market came down, kind of flirted with a daily VWAP, and then broke down, rallied back up above it, and then we saw some strength towards the close with just a little bit of profit taking once again. So whether you were bullish or bearish, there was something in there for everyone today as this market completed basically 2 up cycles and 1 down cycle. So we had a stage 2 uptrend distribution, stage 3 decline, stage 3 distribution, stage 4 decline, 1 accumulation, and a stage 2 markup again. So we see these cyclical patterns repeated on every time frame, and basically overall though, we're in a downtrend, and that's the important thing to remember. There is no sign of any evidence of a bottom in here. We've still got this declining 5-day moving average. The one thing you can say is maybe we're turning more neutral in here, and as this market absorbs bad news and doesn't really get hit as hard as you might expect, that's actually a positive. It's not a positive worth buying on. It's a positive that the market can absorb it without really getting smashed, and again, that's part of a long process that occurs when markets struggle to make a bottom. The one thing that's been impressive lately is the resilience in the semiconductors. They were up today 7 cents. They were up last week. The market, here again, you can see that it's struggling with this declining 50-day moving average. We've got all these moving averages bunched together, which just confirms that there's a lot of trend indecision in here. What's really going to be important for this market is probably a move above 29.5, 30, and then maybe it can go on and contest that 200-day moving average. But really no signs of any reason to be involved. I just wanted to point out that this market is turning more neutral, and that's part of the process. You have your stage 4 decline, stage 1 accumulation. But as they say, if they don't scare you out on the way down, they'll typically wear you out as the market turns sideways and recovers and heals from these large sell-offs. The XLF did make a lower low today, and it did close down at these in new low area. But as you can see by that big green candle, it did experience a lot of strength in intraday after that real severe down opening. And the opening prices were the low for the day. That was pure panic. And you don't have to panic if you're in cash, which is why I've been suggesting for quite a while that this market really ought to be day traded and very short-term oriented the way that you want to approach it. So they experienced the same thing. Rally initially, struggled with that VWAP, break down further, and then a rally here late in the day. No signs of any bottoming process really in here, as we still see the market stuck under last week's lows. This support acting as resistance in here today. So, what could happen bullishly in here is maybe we get back above 24.5. But remember, we've got all these levels of potential resistance up ahead. 26 to 26 and a quarter is, one of your more important levels here over the next couple weeks. I would think that'll be relevant. But still, just, more short-term oriented trades in here than anything else. The IWM Russell 2000 didn't make a lower low today, so that's somewhat encouraging, but we're still in a downtrend, so you can't really read into it. This market still did lose 1.6%, so if your 401k is invested in the Russell, you're still down today. You can't look at that green candle and say it was a positive thing. We've still got a lot of weakness in this market. The more time support is tested, is it going to break down? It typically weakens that area as it's tested more often. So we've still got this, ugly pattern of lower highs and lower lows. And looking at the 30-minute time frame in here again, it's looking more like just range bound 64.5 up towards 68 for now. The 5-day moving average has turned sideways, confirming more neutrality in there. And it's just a good time to kind of look at this market. We've got the Federal Reserve tomorrow. Typically, huge volatility after the meeting. I don't know if that's going to be the case this time, but just a lot of reasons to maybe sit on the sidelines and observe. By the way, on Thursday, I've got an online class teaching technical analysis. If you're interested in that, look at alphatrends.net. I'll post some details probably tomorrow morning. The NASDAQ 100, again, pattern of lower highs and lower lows. It did make another lower low in here today. Closed, higher than the open, but still down 1.8%. This market, continues to make lower lows on the weekly time frame. So there's really not much encouraging here on the intraday time frame. When you look at the 30-minute time frame, it looks like the range in here right now is maybe 41.20 up to 43.5. Just not a lot of reason to be aggressive, either long or short. So just continue to be defensive until this market can provide us with better opportunities for low-risk entries.